Hey guys, Robbie here, back to talk to you about the crypto markets. And today we're going to look at the fact that Ethereum has just absolutely blown off its top with 20% gain in a single day. Ethereum has broken above 2200, more than doubled Bitcoin's move, and became one of the strongest major crypto assets overnight. So what's caused it? Donald Trump, the US Treasury's infinite money printer, institutional accumulation, or one enormous short squeeze? And for those of you that don't know, we've been looking at ETH quite a lot over the last few videos. It might be worth taking a look at those as well after this one, because some of those videos also feed directly into why this pump actually happened. It's not luck. The macro environment lit the match, and Ethereum-specific demand loaded the spring, and then leverage caused the explosion. Quick reminder as always, this video is for education and entertainment purposes. It's not financial advice. You should always do your own research. So at the time of writing the script, Bitcoin had rose 8%, but as of right now, it's actually up almost 12% in the last 24 hours, making its way from 64k to about 72k. Meanwhile, XRP made moves that wasn't too dissimilar, up 18% in the last 24 hours, sitting at around $1 and now rising to $1.18. So this was a broad crypto rally, but it overreacted to it. It actually was up 22% at the time of writing the script, now sitting at nearly 19%. This suggests that the spark came from outside Ethereum, but the fuel was definitely still sitting inside it. The first spark came from the American bond market. The US Treasury announced that it would at least double buybacks of long-dated government debt, from a maximum of $2 billion to at least $4 billion per operation. The 30-year Treasury yield had reached 5.34%, which was its highest level since 2007. After this announcement, yields fell, the dollar weakened, and risk assets rallied. When the risk-free return falls, investors become more willing to own volatile assets. And Ethereum kind of usually rallies and behaves like a hyped up Bitcoin. Now, this wasn't the Federal Reserve restarting quantitative easing. The Treasury is essentially restructuring the debt. And realistically, the extra support is kind of small relating to a 32 trillion Treasury market. So money printing is kind of an exaggeration, but the restructuring also signaled something that mattered. Traders saw falling yields. They interpreted that as a weak dollar. And then you have a government willing to stabilise the long end of the bond market. That was the recipe for loosening conditions for risky assets. When the bond market was seemingly creaking a bit, the Treasury showed that it was prepared to provide support. Here we can see the US Treasury Department announcing that it is increasing by at least double the size of liquidity support buyback operations for longer dated nominal coupon securities. The current maximum size of $2 billion per operation will be at least $4 billion per operation. This increase in buyback operation size reflects Treasury's desire to provide greater liquidity support in longer dated nominal sectors. Now, this was not a clean easing story. The Fed minutes released as reported by Reuters that day were actually hawkish. So if long-term yields reverse higher, then Ethereum could surrender some part of this move. But on the other hand, we still have President Trump turning extremely bullish, as has usually been his stance on crypto. Let's listen directly from President Trump.
So 2 years ago, our country was dead, and now our country is the hottest country anywhere in the world. There's nobody close. No other country is close, and every country will admit it. So now we need Congress to take the next step by passing the Clarity Act, a fair version of the Clarity Act, and this landmark structure legislation. It's a very, very powerful structured legislation which will keep us ahead of China, keep us ahead of everyone else, will open the door to the next wave of innovations and innovators.
That is the US president explicitly pushing Congress to complete crypto market legislation. Why? Because the Clarity Act will help define which tokens are securities and which are commodities. It'll also help define which regulatory body has authority, the SEC or the CTFC. Bitcoin is kind of already clear. Ethereum, though, kind of has a much larger economy. There's stablecoins, DeFi, staking, tokenized assets. The list goes on. So to have regulatory clarity around Ethereum and have a president that is pushing for that directly could also point towards perhaps why Ethereum outperformed Bitcoin in this last day's surge. Now, combine a US president that's bullish on crypto with the fact that the SEC, kind of somewhat wildly to me, given my experience of this, have essentially proposed exemptions for smaller token offerings, offering a conditional safe harbor for crypto assets. Check this out. Startup exemption, one-time non-exclusive exemption for Securities Act registration requirements. It will permit issuers to conduct offerings of covered investment contracts up to 5 million during a period of up to 4 years if they satisfy certain conditions. Fundraising exemption is also here. This goes on to talk about a broader fundraising exemption of reaching up to 75 million. It is only a proposal, and the Clarity Act has not passed. But these are super hyper bullish proposals, and it shows that Washington is at least moving from regulation by enforcement towards actual clear rules. Another point to mention is that Watch Your Guru here reported that President Trump considers buying sizable amounts of Bitcoin and other crypto. Obviously, we talked about it calling on Congress to pass the Clarity Act. I think it's important to clarify, Trump did not announce that the government was buying sizable amounts of crypto, but he did suggest the idea had been discussed and that he would listen to recommendations. Is that a bullish tone? Absolutely. Does it constitute a purchase announcement? No, not at this stage. So why did Ethereum perform so highly? Policy and the macro environment have explained why crypto has moved, and demand explains why Ethereum led. Yesterday, Ether ETFs attracted $180 million. Correction, $189 million on the 19th of August. Their largest daily inflow since October 2025, which is around the time of the last bullish pump. These are physically backed funds, so new investor money has to be matched by actual ETH purchasers. That is real spot demand, arriving on the exact same day the macro backdrop arrived. And then, as we talked about in previous videos, we have Tom Lee and BitMine. As Lee points out here, over the past week we acquired 9,926 ETH. BitMine has bought ETH every week since the inception of ETH Treasury on June 30th, about 14 months ago. This takes its holdings to approximately 5.8 million ETH. That's around 4.8% of ETH's total supply. Now that one single weekly purchase didn't cause this level of pump, but the continued accumulation points towards investor sentiment. So BitMine continues to acquire ETH. But then interestingly, at the exact same time, Fidelity's parent company FMR added another 7.14 million BitMine shares, taking its position to 7.7 million shares worth 102 million. Fidelity aren't alone. Wells Fargo, BlackRock, Goldman Sachs, Morgan Stanley, JP Morgan, all increasing their exposure to BitMine, an ETH Treasury company. This isn't proof that Wall Street has abandoned Bitcoin for ETH. It just shows us that ETH is now earning its place in institutional portfolios alongside Bitcoin. And meanwhile, there are other micro-bullish factors that are occurring here. Ethereum has now processed more than 70 trillion in stablecoin transfers. BlackRock, meanwhile, has launched 2 tokenized money market funds on Ethereum. And major financial institutions are using Ethereum-connected networks for funds and settlements. What does this tell us? Wall Street doesn't have to buy ETH directly for Ethereum to become more valuable. It can build funds on Ethereum. It can use stablecoins for cash movement, and it can use ETH for tokenized assets. Direct accumulation of ETH and regulated investment products, as well as infrastructure, are all different claims, but they're all developing at the same rate. Again, these developments didn't suddenly happen yesterday. Go back and take a look at the recent videos we've done talking about Ethereum, and you'll see that this has been happening over a period of time. So they haven't caused 20%, but they have been part of the reason and the collection of the reasons why Ethereum continues to be such a popular choice amongst Wall Street and wider investment funds. I recently did 2 videos breaking down Tom Lee's 250k investment thesis. Broadly, his argument is that tokenization, settlement, staking, and eventually machine-to-machine commerce are going to massively expand Ethereum's market. And we're already seeing the signs of that. One green candle doesn't prove 100 times today's price, but several parts of his framework have appeared together recently and are culminating, as of yesterday, improved financial conditions, increased regulatory progress and framework, institutional infrastructure, and continued ETH accumulation. The 250k target remains grandiose and unproven, but the framework beneath it is becoming harder and harder to miss. Then, having said everything in this video, leverage turned the rally vertical. Around 2.74 billion of crypto shorts were liquidated in 24 hours. That is the biggest ever liquidation event in the history of crypto. One hyperliquid trader who made 49 million recently shorting crypto lost 50,000 ETH, $24 million worth of ETH in 12 seconds as a result of this rally. That one trade and purchase alone moved Ethereum roughly $43. Prices rise, shorts are forced to buy, their buying pushes the prices higher, and more shorts are liquidated. So the squeeze explains the speed of the move, but it doesn't mean that the underlying catalysts for this were fake. In other words, it doesn't mean that we should assume that every dollar of this rally constituted a new investor. Some of it is essentially mechanical and trading related. But what it is telling us that once the shorts are gone, that forced demand vanishes. So in summary, why did ETH just pump 20%? The Treasury changed the market's perception of liquidity. Trump and the SEC improved the regulatory mood. Ethereum accumulation continued. ETF demand continued. And then an overcrowded short market detonated. But let's get one thing super straight here. 20% candle doesn't mean ETH is going to just move in a straight line to 250k. The Treasury program begins in September. The Clarity Act has still not passed and the Fed is still worried about inflation. I'm now watching three things. Can ETH hold 2200? Do the ETF inflows continue? And how does ETH continue strengthening against Bitcoin? If Bitcoin and ETH continue moving together, this could be more than a squeeze. But if yields rebound and ETF demand fades, the euphoria of this pump could reverse just as violently. And this brings me to the end of this video, exploring where that 20% pump has just come from. I'd love to know your opinions. Is this genuinely the start of Ethereum's revaluation, as Tom Lee suggested in his thesis? Or is it just simply a spectacular short squeeze of 2026? I'd love to know your thoughts in the comments below. Meanwhile, if you want to hear the full argument from Tom Lee and Joe Lubin around the case for 250k Ethereum, I recommend that you watch my last video, which you can find here. Or if you want to explore Bitcoin versus Ethereum treasury models for companies, you can check out that video that I've recently done too. Either way, I'd super appreciate it if you took the time to like and subscribe, and I'll catch you on the next video. Cheers.